Jerome Powell talks recession and mortgage rates go lower. This is the weekly report on Major Money Matters. Welcome to Major Money Matters. My name is Major. I'm the host of Major Money Matters. I'm a mortgage broker powered by Edge Home Finance. So if this is your first time to the channel, I welcome you to hit the like, comment, and subscribe. Hit the bell notification so every time we post the weekly update, as we're posting right now, you get an alert to let you know what's happening in the economic world and how that's affecting mortgage rates. So let's get to this, okay? Let's start with the charts first. All right, so let's recap from about 5 days ago from the last time we put out our weekly report, okay? We had told you that the Fed had raised rates. We had told you that they had essentially stopped the bleeding, and we had used this point to illustrate something that I try to tell people all the time. Just because the Fed raises rates doesn't mean that mortgage interest rates go up, okay? Now, look at this line here. If this is your first time here, I will recap and tell you this is a chart for mortgage-backed securities. As this line trends down, mortgage interest rates are moving higher. As this line trends up, mortgage interest rates are moving lower. This line is inversely proportional to actual mortgage rates. So we look at the chart from this week and we see a trend lower over the last 5 days or so. And this is happening after the Fed raised the Fed funds rate 75 basis points. If we go back to my previous videos, I will tell you that normally when the Fed raises rates, what happens is interest rates tend to go lower because the Fed's job is to curb inflation. That is their primary mission, to curb inflation. So what you have going on is the Fed raising those rates and the market's responding by thanking the Fed basically, and mortgage interest rates going lower. Now, I am actually releasing a video today, hopefully this comes out today, that talks about the competition among mortgage brokers. And in that competition, you're seeing the Fed is moving the Fed funds rate, which is curtailing inflation, and you're seeing some great action from one of my primary lenders, United Wholesale Mortgage, to give you lower interest rates. So we see that this chart is trending lower. If you look at this, you know, we're back, rates are back about where they were about 2 weeks ago, maybe, almost erasing the inflation Friday, as I called it, where the bond market just tanked and rates skyrocketed. But when I say rates are moving lower, it's relatively lower. So you see relative to this chart, you know, you're getting some lenders that are taking some more aggressive pricing, like UWM. Your expectations should be mortgage rates for conventional. Maybe you're still probably in the sixes on unconventional loans. VA loan, VA jumbo, you're in the mid fours to high fours on VA jumbo. Non-jumbo, and that's because I have some lenders that give excellent pricing on VA jumbo. Non-jumbo, you're probably in the high fours to low fives on a non-jumbo VA. FHA and USDA trending also in that area, high fours to low fives. If you're getting a quote that's higher than that, you probably should give me a call and see what you could be offered on your mortgage. Now, let's talk about a few other things here. So I always tell people to be very cautious about the news that you hear or things people perpetuate in the news. This article right here, mortgage rates rise again, pricing more buyers out of the housing market. Now, this article is actually released by CNN. I'm recording this video on the 24th of June. This was released by CNN on yesterday, which makes no sense because yesterday I had some great pricing going on. And mortgage rates were actually dropping as they released this article. And this goes back to what I've told you 100 times. You know, reporters are going to do what reporters do. They don't know it. They're not updated on the market. They just have to release a story, basically to keep their job. And this was really off base, according to the times of what we were seeing. But I do want to talk to you before I get into what I want to spend some time on talking about Jerome Powell. A couple of weeks ago, I talked to you about this word sentiment. Sentiment, how people feel about a situation. Many decisions are based on how people in the economy feel about something. And you're seeing sentiment where people are getting much more cautious in their spending. Now, when people get more cautious in their spending overall, they put less money into the economy. Less money into the economy means businesses don't grow as fast. Businesses start to lay people off because they're not growing as fast. And what happens is our economy kind of becomes a self-licking ice cream cone, a self-fulfilling prophecy, where, people feel like the economy is going into recession, so they cut back. So the economy does go into recession because they cut back their spending and not putting money into the economy, and they start saving more. So what happens? The Fed then has to drop the Fed funds rate again to stimulate the economy. It's a vicious cycle, okay? So let's talk about what Jerome Powell said. The Fed is strongly committed on inflation and notes a recession is a possibility. Now, according to the data, as of Friday, we will be in a recession. Okay. Now, does that mean that the country's going to shut down? But I'm saying statistically, according to the data, we will likely be in a recession because a recession is indicated by 2 consecutive quarters of negative GDP. GDP was negative last quarter, and I believe that GDP is going to be, gross domestic product is going to be negative again. So technically, we're going to be in a recession. Am I saying it's a huge recession? No. Usually, interest rates follow after when you go through a recession. It takes a while for those things to kick in, but technically, by statistics, we will be in a recession when the numbers come out at the end of June. So watch out for that news to hit of we're in a recession. So do I think everything's going to fall apart like it did in during the housing crash or something? No. It was just statistically we're going to be in a recession. Then we'll see how things fall off from there. Take note of this, okay, on the key points here. It says that means, this key point that Jeff Cox writes in here, that means higher interest rates until compelling evidence emerges that inflation is coming down. When you read this, you have to understand higher interest rates. I hope he's not talking about higher mortgage rates. He's talking about higher Fed funds rates until compelling evidence that inflation is coming down. The Fed's going to continue to hike the Fed funds rate, but I've showed you when they hike the Fed funds rate, that usually is good for mortgage rates. It's really inversely proportional to what many of your friends think. So you're going to see potentially, once investors see that the Fed has a hedge on inflation or has inflation under control, then you're going to see interest rates really start to decline, in my opinion. So Powell goes on to say, at the Fed, we understand the hardship high inflation is causing. We're strongly committed to bringing inflation back down, and we're moving expeditiously to do so. The Fed chief said in remarks for the Senate Banking Committee, we have both the tools we need and the resolve to restore price stability on behalf of American families and business. Now, this sounds pretty strong language. This sounds like you're talking, okay, we have the tools, we have the resolve, we're gonna do it. Hedge inflation. And then he goes on to say, it is our goal. It is very challenging. It has been made significant. Now you see he's kind of backing off of that. He was pretty strong in the beginning. Now he's starting to back off what he said. It is our goal. It is going to be very challenging. It has been made significantly more challenging by the events of the last few months. Thinking here of the war and commodities prices and further problems with the supply chains. The question of whether we're able to accomplish that is going to depend on some extent to factors that we don't control. Well, we started off so strong. We have resolve, we have the tools, but there's stuff beyond our control. Okay, so, what the Fed has been trying to do is achieve increasing the Fed funds rates, hedging inflation by achieving what they call a soft landing. Soft landing meaning they're not going to push us into a recession. So what Powell is basically saying is that, hey, recession is a possibility because he's already starting to see signs of a recession. And he knows that at the end of June, when the numbers come out for the second quarter is going to tell us, hey, we're in a recession. What's my recommendation? Okay, I tell you all this data and then I tell you, what my thoughts are with the recommendation. Okay, my recommendation does not change. Okay, now, if you're a seller, what should your expectation be? If you're a seller, you should expect longer days on the market. The time of houses selling like hotcakes, that's kind of out. We're seeing a lot of homes go at asking. Some, if you have some that's been in escrow and then fall out, they're getting less offers on their homes. So you're seeing some homes go for slightly below asking. Now, it's kind of a what I call pocket markets. You might have some areas where the market is still hot and you get 10, 11 offers on a property. And then you have some areas where it's not as quote unquote hot and you're getting less offers on a property. Maybe a house has been on the market a little bit longer and you have a seller that's being impatient. So buyers are able to get that home at a deal. I've had many buyers that have been able to do that potentially in the last 2 to 3 weeks. If you're a seller and you're going to sell probably in the next 2 to 3 months or so, I would recommend listing your house sooner rather than later. If interest rates continue to go up, then you're going to see some more challenging situations where you might be on the market for a while. But we got a little bump here down to the lower as we throw the charts back up. We got a little bump here lower, and we don't know whether this is just a temporary reprieve or whether this could stick around because there are so many factors affecting interest rates. But about 2 weeks, the news is going to come out like, hey, we're in a recession. Talk to you guys soon. Hope you guys have an amazing week. Be aggressive in your offers. Get into a house, and then you can refinance later. Okay? People have said it over and over again. You marry your house, but you date your interest rate. All right? So you can change your interest rate multiple times while you're in that home. See you guys next time. Have a good one.